Good morning. It's Thursday, August 1st, about 6 a.m. Central Time. I dragged Bill Baruch's banner. It's his first cameo here on the Metals Minute. He'll actually be on CNBC today at the halftime show, 11 a.m., so check that out. If you trade on the equity side, we do have a wealth management team and everything, and we put out portfolios. We build out everything from conservative, moderate, to aggressive portfolios. We even have a concentrated alpha. You like to see things on that, shoot me a message here or shoot an email to info@Blue Line Futures. So getting into the markets here today, so Fed Chairman Jerome Powell, he didn't say much on Wednesday. He did manage to give the hints that they would be open to an interest rate cut, or at least it would be on the table for the September meeting. So looking at the CME's Fed Watch tool, and this is where I kind of really just go to the scores on the board here and look at what the data shows. And it does show we are at 5.25% to 5.5%. That's currently where the Fed Fund futures rate is. So you go to the September meeting, that doesn't show up at all. It goes straight to an 84.5% chance of a quarter basis point cut. There's even a 15.5% chance that the Fed makes a 50 basis point cut. So no indication that the Fed is looking to leave interest rates on the table. Now, taking that back to the data since 1990, if you look at how gold futures have reacted on that first interest rate cut, historically, they've rallied about 6% within 30 days of the first interest rate cut. The question is, how much is that already factored into the markets right now, and how much became factored into the markets yesterday? So we've got to keep an eye on that. And then also, we do need to look at how to risk management our current positions that we have on. If you've been following the seasonal trade, which is at the bottom of the metals edge, breaks down the last 15 years, how things have played out, what the average move is on in that particular seasonal, you'll want to look at that as well. And we want to adjust stop losses, things like that, to preserve and protect some of the hard-earned capital that you guys have made on these particular seasonals, at least that specific one at this point in time, as it is above the entry date. Now, getting into the markets here a little bit more, we are going to see a ton of economic data here today. And I hate this when you get a reactionary move that has great positive momentum in your favor or in the direction you're trading. It doesn't matter what it is. If you have event risk, and you have to weigh that in as a trader, how will you let event risk play out in your market? Are you going to start to hedge some positions, reduce some positions, raise stops, things like that? That's what we have to talk about and think about here later today. So we have the challenger job cuts year over year coming out. We've got the unemployment claims. The number is 236, kind of that pivot line's been 235 about the last few weeks here. We've only seen one or two upticks into the 240s, couple downticks as well. But we want to see that elevated here as the employment market becomes a little bit strained. Jerome Powell did talk about how there is wage growth, but the wage growth seems to be isolated in certain areas. It's not like everybody's getting that COVID wage growth, what we saw before. Things are starting to reset a bit, and not only on the inflation side, but in other different aspects of the economy as well. So we're going to have manufacturing PMI expectations are 49.5. ISM manufacturing PMI 48.8. ISM manufacturing prices, consumption spending, total vehicle sales, and then we get natural gas storage. So if anyone's actually looking at that right at the moment here, probably should be since it's listed up there. So looking at other markets here, the dollar index did get a bit of a bounce back in the overnight market here. So it's bounced off kind of the 200-day moving average moving up. That has that spillover effect. Unfortunately for the gold market here, gold did break through that key area that we were talking about. It was about 24.82. That's kind of where I shift more to a bullish focus, less of a neutral focus, and it looks like we're going to gain some positive momentum, start moving back up. But really, we got to close over 24.82, close over 2,500. Then we could start to talk about threatening all-time highs again, and the party's back in favor. 50-day moving average 24.20. Probably don't want to see the market go below that, and we trade and we close below 2,400. Party's back over again. You guys don't like to hear that, but it's just the way the market is. Like, I really don't care. I just manage whatever current situation that we're in at the moment, regardless of what the market is. Gold silver ratio, it was at about 86, 87 to 1, came back down. Now we're at about 85 to 1. That is the 200-day moving average on that particular ratio. We'll see how that plays out. The problems with silver right now, and people don't want to hear problems with silver. They just want silver $35, $40 and above, which I do too. trust me, I'm on your side on this, is the copper market. Look at the copper, still hugging the 200-day moving average. We had this massive sell-off in copper as the Chinese economy had weakened. We went below the 200-day moving average. We started to move up. We got an incredible move yesterday here, and then it's pulling back a bit. So we're down about 1%, and that's the reason why silver is down 6 cents, or is actually only up 6 cents at the moment. So keep an eye on the copper market. I think copper is your canary in the coal mine on the silver market. When you saw copper prices up significantly yesterday, and then you saw the gold market up and pretty firm, that is your clue to react on the silver market. I'm not saying go all in. I'm telling you that it is just like somebody shooting a flare going, hey, I'm silver, take a look at me. It might be an opportunity upside, and silver was up about 60 cents at one point today. So just have a checklist here and go through, what's going on. Dollar index was significantly weaker yesterday. Treasury yields across the board were weaker. Gold market is up. Copper futures explode. Heightened geopolitical risk, and silver is only up 11, 12, 13, 20 cents. Probably should be a little bit higher than that. There's where your play is for your intraday trading on the silver market. So you got any questions, give me a call. I may or may not do a video tomorrow. I've been in Chicago for like a week and a half, and I got to get back here to Florida, back to that office. So I'm starting to get a little bit homesick, and how many times can I cross the city at 4 in the morning and not get mugged? So kind of rolling the dice here every time I hike over here in the morning. But give me a call. You got any questions? 312-858-7303. Remember, futures and option trading involves risk of loss. Be sure to check out Bill. He's going to be on CNBC. He's on all the time over there. So risk of loss involves futures and option trading. Give me a call. Past performance not indicative of future results. So take care. Need anything, reach out.